One of Australia's biggest banks just changed their interest rate, and we're going to talk about how to play hardball with your lender. Let's dive in, starting off on the top. So we've seen one of Australia's biggest banks make changes to its interest rate recently, where Westpac is decreasing its interest rate on one of its variable loans. So the big bank is now offering an additional discount of 0.15%, which will apply to their 2-year introductory honeymoon rate and effectively allow borrowers in the market with a low variable rate. Now, keeping in mind, it is a variable rate. So what we know about variable rates is effectively it's a 2-year honeymoon period whereby you get a low rate for a short period of time. And then after that honeymoon ends, the rate goes up. So it's 3.59, 3.49 if you've got more than a 30% deposit. However, after the 2-year period, the variable rate does go up by 0.4%, and that's why we can see the comparison rate is higher. So something to keep in mind. It is a positive sign as we're starting to see the lenders ramp up with their competition, and these changes that Westpac have made only applies to new applications from August the 18th. Now, what we're seeing is many lenders are starting to introduce new products as well as reevaluate their existing variable rates, as we've seen so many rate increases that they're starting to want to compete with each other and chase new business. Now, to give you an example, if you'd had taken up a loan, for example, from Westpac only 12 months ago, the variable rate they would have been giving you was anywhere in the 2.29s, 2.59s. We've seen an interest rate increase of 1.7%, roughly speaking, in the last 4 months. So that actually puts your existing variable rate around that 4.2%. So even if you have an existing loan and there's been changes made by the bank, for example, Westpac only offering it to new customers, it still might make sense to review and reevaluate your situation. As we know, the banks are trying to pick up new clients. There's a bunch of fixed rates expiring soon, and there is a large gap between the current fixed rates on offer and the variable rates. So it definitely makes sense to look for a competitive variable rate, or at least consider your options if you are thinking to go fixed and try and understand where the market's going. We also saw that the bank increased its discount on its 4-year fixed rate. It increased it by about 1% down to 4.99%. So some positive signs there. We're starting to see the fixed rates come down, which gives us an indication that the banks might not be predicting rates to be as dire as what they are. And the bank's starting to really get competitive in the variable space. And putting in perspective, from existing lending 12 to 18 months ago to new lending now, the difference in rate is about 1.2%. So not as high as the 1.7% increases that we've seen recently. Now, if you do have a mortgage, how do you play a hardball with your lender to cut your mortgage costs? Well, we know that residential property buyers can negotiate about a 2% discount off their home loan. So what that means is on $1 million mortgage, you can save about 20 grand per year. And we're seeing that lenders are competing for the more than $5 billion in expiring fixed rates that are going to be flooding the market in the coming months. Now, there is a big gap that's emerging between the highest and lowest rates as lenders reset their borrowing terms with all the changes we've seen from the Reserve Bank. As we talked about earlier, they went from a 0.1% cash rate to 1.85% in the last 4 months. To give you an idea, for a 2-year fixed rate, the difference between the cheapest lenders and some of the big banks like NAB is 1.4%. So you can actually get a fixed rate for 2 years as low as the 4.49s, 5.89s with NAB. Even for a 5-year owner occupied, there's nearly a 2% difference. And on the variable rates, we're seeing anywhere in the 3s. It's recently gone up, so it's probably mid 3s now. To a 5% rate. So there's a big difference between what your existing lender might be able to provide you and what you can get elsewhere. And we've seen that this has been a real issue as we see household disposable income ratios really drop as the rental stress and mortgage stress as a percentage of household borrowings increase to record levels. And lenders are really finalizing their best rates in the countdown to the spring sales season, which is traditionally the peak period in which it starts at the end of the month. So it starts in September and runs through till Christmas. And we're going to see the lenders start to really pick up. Now, what can you do? It is an opportunity to shop around. The hardest hit states are Victoria, South Australia, Tasmania. I'd argue if you're really anywhere in Australia and had your mortgage for more than sort of 12 months, it's probably worthwhile at least having a chat and looking at ways that you can reduce those costs, because we definitely have seen a big increase in the market recently. A few practical tips you can do: have a chat with your lender as a first stop. See if there's anything they can do, reduce costs, at least get your rate down, or even consider a fixed rate. Be careful with fixed rates, as we talked to there. Depending on your lender, it might not be that competitive, or you could be fixing and it could be a trap. The lenders might know where the cash rate's going to be, and if the cash rate's going to be lower than what you're fixing in over that time, then you got to try and weigh it all up. That's something that we can help with and run through a bit of a feasibility, talk about where the markets are going, where the forecasts are at, and help you make an informed decision. But yeah, I think firstly, have a chat with your lender and see if you can get the rate down. If your variable rate's not in around that 3.5%, if your fixed rate's not in the mid fours for like a 2-year fix, well then hit us up. We're a mortgage broker based in Brisbane. We help people Australia-wide, and we'll be happy to have a chat and look at your situation. Simply call us on 1300 088 065 or visit us at huntergalloway.com.au, where we can have a bit of an analysis of your situation, discuss your scenarios, your plans, if you're going to buy an investment property down the track, if you're planning to smash off the loan, so we can get the setup correct and right for you for both now and in the future. Guys, thanks for watching. We'll see you again soon.